Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them. Good morning, and welcome to I'm the Trader Capital Live Trading for Law. First and foremost, all glory to the Most High God, our Heavenly Father. Let's bow our head for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again, to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. All right, it's Not for Professionals Friday, May 8th. Not for Professional NFP Friday. Let's go. Let's go. Before we get into the charts though, happy Friday, happy Friday, happy Friday, happy Friday. Before we get into the charts, I just want to say this, all right? There was a time I used to sit down at the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping that the trade would work. That's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail. All 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets. So you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Woo! Let's go! But before we dive deep into the 3 core pillars, when you step into this arena on this battlefield, you must first have 2 crucial realization. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do. You're competing against the smartest minds on this planet. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets come from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Second is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we got trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we are going to hone in on your trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And I'm the Trader Capital. Confidence in our trading edge comes from 3 things. First is understanding how the market actually operates, not what social media says, but how money truly moves. Second is having one trading model, one model with IPTA signatures that you trust and execute consistently. Thirdly is having a plan and process, because without a plan and process, you are just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the third piece, the process part. I'm not here to force trades. I'm here to execute my plan step by step in real time. Are you guys ready? Why? Let's get into the live trading for law. Now, as you're watching, don't just look for entries, but pay attention to the process behind the entries, because that's what will get into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, why you're doing it before during and after each trade, and that is what we're building here. Let's get into our daily processes. Weekly target going to this week is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow and get 1% better. I feel like I'm already 1% better this week already. All right, just from last week to this week, it's been an incredible data collecting, building, growing, and just getting closer to my model, my procedures and protocols. All right. Risk. I acknowledge any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the game. Is I accept, not I acknowledge, but still same thing. News is NFP Friday, not for professional Friday. We had NFP come out at 8:30. All right, we have medium impact news coming out at 10. All right, we have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program going to this week is a buy program. Let's go ahead and review price action overnight to see if anything's happened, all right, to change our weekly program for us here at I'm the Trader Capital. Oh, Friday. All right. Okay, for our weekly program to flip, right? Price will need to come all the way down and take Monday's range low, which we're nowhere close. All right, so nothing's really happened in price to change our weekly program for us here. Is this a fib or is it parallel? It's a fib, then I can add one more. We got one, we got uno. Oh, okay. We'll worry about that another time. That's previous day. As you can see, yesterday we dropped down into a 4-hour inefficiency, all right, and then continued higher. I'm going to be paying close attention to those 4 hours, all right, because we are trading in uncharted territory. Anyway, let's adjust our higher time frame ranges. 20-day, well, we can move to previous day and 20-day. 20-day low, we're good for today. And we are all set to go. Oh, we took yesterday's low, huh? Yesterday, right before we left the stream, this was the trade I was watching, so let's just pay attention to let's watch the outcome of that trade that we were watching and see what the remainder of the day gave us. PM session, I believe we had 2 opportunities in the PM session: a sell, a continuation sell, and a retracement buy, because we came down and we took dealing range sell side, as you can see here, which flipped our buys from buys to sell. And I believe we caught a sell, a continuation sell here. Oh, then that was a continuation. Oh, that must have come and taken it. Let's check it out here. This was the trade that we were watching right before we left. I said, yeah, I'm watching this going into lunch session. Beautiful. It was using first hour's range high, but also I knew I was using that, and I was also using the fib extension as well. Just something I was watching, right? But yeah, that was the trade of the morning right there. The trade of the morning, trade of the day, really and truly. Gave us what? -4, solid stuff there. You can go back to yesterday's stream, and that's exactly where I left it off. I said I'm watching this sell going into lunch session. What a beauty. And for PM, all right, we had this continuation sell after taking dealing range sell side here. We had a sell using PM session open range buy side. It was a macro, so we don't require it to take a liquidity above that high. Okay, came down into sell side, took liquidity below it, displacement, market structure shift above it. When it came down here, still wouldn't have taken you out because your stop would have been here. Gave you negative 2.5 before it came to take you out and then continue higher. And that's how we ended yesterday. So the only trade I've taken this week was on Monday. Let's get into today. Let's get into our 3-step processes that we do every time we're in front of the chart. Nothing changes, all right? We do the same thing, different day, right? Different price action. Our action stays the same, right? We don't change. Man's got a cut out here in these streets. I was looking like a ragamuffin. I was looking mad rough. The difference a cut can make, you know? Feel a bit more confident, you know? You feel like, oh yeah, talk to me. Anyway, step 1, condition, all right? Determine bias, all right? For us, I guess is a daily bias, right? Because the session bias, I guess we'll use the opening range. That would be the more AM session, right? Each session obviously has its own opening range, so that would determine that session bias. All right, for my daily bias, then I'm going with the from 12 AM to current price action. That's what we're going with, daily session. Daily session. Daily program. All right, and in order to identify a bias, all right, well, in order to determine a bias, we must first identify our dealing range. Okay, we go for the daily, we go from midnight to current price action. We note lowest low to highest high. You can also go from highest high to lowest low. It's a personal preference. I forget every time I do this, it's no longer the fibs job. It's the parallel channel. Because this parallel channel allows us to do this, right? And one more sick thing it allows us to do is it allows us to set alerts when it exits the channel. Sick. Just learned that yesterday. Ain't it? All right. Above dealing range is all-time highs, so we have no liquidity. We just have our standard deviation to go by if we take buy side. Below, we got previous daily low. We got previous daily low below price. And we still have Wednesday's AM session, open range sell side in play down here. Should we get down there? And now we wait for one side of our dealing range to get raided, which will give us daily bias going into this not for professional Friday. I guess this was all NFP did just this week here. Thank you. Ding 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 da ding 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 da. 9:30 open, 9:30 open. Decent size open range gap. All right, it's below price, so we gapped up. We have a premium gap up. Let's see what the markets bring to us today. We are live and in the flesh. Live. It's cold as shit in here. Fucking hell, mate. Watching how we use first presented fair value gap here. I like this. Market structure shift here. I want to see you stay above now. That would have been an entry there. But obviously this is just the support in time frame. I don't really frame entries on that right now. Where I'm at in my understanding of price action. But we see you though. We see you. Do your thing. Do your thing. Do your thing. 21. Look at all these liquidity. Look at all these liquidity. Looking mad juicy juicy. Juicy booty. It's Friday. It's Friday. Got a first Pezzy on the 1 minute. So yesterday we got our About Us intro to I'm the Trader Capital together. Today we're going to be working on, what are we working on? We're going to be working on deal slash strategy, all right? This is following the Falnotch formula. Deal slash strategy. This is where we talk about risk, control, return. We get into the 3 rows, our team, and we get into our deal, right? And our strategy, like what are we doing? What is our deal? What is our strategy? What is our edge in the market? How are we getting alpha in our asset class, right? This is behind the scenes of I'm the Trader Capital. We're building it live in the flesh right here as we trade, okay? We're building it live in the flesh. Risk, control, return. All right, so we talk about the risk. There's risk in everything that you do, all right? Even with a 9 to 5, there's risk in doing a 9 to 5. Let's talk about the Spirit, folks. The 17,000 people that just got laid off from Spirit just last week, right? That's a risk. That's risky business right there. They thought they were secured in their position. Come to find out, they're not, right? They just got laid off because the company failed. That's a risk you take. All right, so there's risk in everything. And risk in going to your job, right? There's a risk that you might not even make it to your job. I don't wish that on anybody, touch wood. I don't wish that on anybody, but might be an accident on the road, you know? You might slip and fall in the shower, getting ready to go to work. There's risk in everything. So we must discuss the risk. Just like there's risk in everything, there's risk in the financial markets, right? Need to be aware of the risk coming in. All right, our job here is risk management. That's the holy grail. That's why risk management is the holy grail in the financial markets, in everything really and truly, but definitely in the financial markets. In this game that we play here. So, when it comes to risk, what are the risks in trading? Well, not just in trading, in the financial markets in general, okay, because that's our deal, right? Our deal is trading the financial markets. Specifically, the futures market, right? And within that, NQ. Pow! So top three risk in this business that investors and traders should be aware of, right? Top three risk. We have black swan events, and we'll get into the specifics after we list them. Taking dealing range, buy side. All right. Our daily session has been identified as a buy program in line with our weekly program. All right, so we're looking to be a buyer of this market. We're looking to be a buyer of this market. I wish it made a sound. Why doesn't it make a sound? Why doesn't it make a sound? Why don't it make a sound? Where is the sound? I would like a sound. Trigger only. Trigger per bar. Once bars close, once per minute. Oh, that's too much. I would like a sound, please. I'm not getting that sound. Play sound. Where was the sound? I didn't hear no sound. I didn't hear a sound at all, did you? I didn't hear no sound. It's Friday. It's Friday. So you know what it is. We know what it is. You know what it is. It's a demo day. It's a demo day. I kind of want to get into my continuation and just see how they play out, okay? I'm not ready to jump in them with the funded yet, okay? I kind of just want to do an entry drill on them, gain some confidence in that before I put risk behind it. If you don't have confidence in something, why would you put money behind it, right? You have to have confidence in yourself, in what you're doing, before you can put risk behind anything. You know what I mean? It doesn't really matter which account, but let's go. Right now would be a continuation account. If we take buy side here, but we haven't come into the inefficiency. I want to see price come into an inefficiency on the 1 minute time frame at least. Inefficiency or liquidity, right? And then market structure shift back above. That would warrant a continuation entry. It's Friday, and it's also not for professionals. Friday. Basa. Yeah, you can also take this liquidity down here too, right? All right. We get a market structure shift here, there. I would be interested in a continuation setup. And obviously, if it comes down and then takes us out, that is confirming a retracement setup, and we'll be also interested in that. Now with these, what I'm thinking is stopwise, right? But I guess we can use the lowest point as our stop as we've been doing. So far, nothing for us to do yet. I'm just prepping for what I think is coming. But I do nothing until it actually happens. Gives it to us here, we'll be interested. Wait. See if we get tagged in here. Now, if we get taken out, all right, market structure shift here, that would warrant a retracement setup. Why it came back inside of it on a 15 seconds? Oh, my entries should be based on the 15 seconds. Once I get the market structure shift, I should be looking on the 15 seconds to enter. If it doesn't tag us in, it's fine. That's okay. It'll still be nice to watch. You know what I mean? Anyway, let me fix my stops in that. 41, 39, 50 right there. And we're tagged in there. Go ahead and delete this. 30. That's a 205.50. We'll sell back one. Want to see price closure below this inefficiency, right? Will give us a warning sign. But really, our ears will be popped up, and a closure in this order block mean threshold, that will be our warning sign to take something off the trade. It's Friday. Entry drill Friday. Demo trading Friday. Alright, we would have got bread and butter already. Puts food on the table. Bread and butter. Puts food on the table. Entry here. Exiting right here. Food on the table. Thank you very much. -1. It's not giving it to us, but we can see all clearly that it's hit it all the way above it. Thank you very much. We adjust stop 2.75, which is 5125. And we are heading to target 2. Oh, there we go. Giving it to us on that same candle. Just like that. That was real quick. That was like a minute. Well, we was tagged in here. 2 minutes in this trade. Thank you very much. Continuation setup. We see you. I've been seeing you all week. I've been seeing you all week, my guy. All right, so the first one was what? 90. So about 210 or some shit like that. It's all right. We'll take it. We'll take it. We'll take it. Just like that. Just like that. Not for professionals Fridays. Done and dusted. Let me clip that. Let me clip that. Optimus, not Optimus, targeting negative 2.5, which is in close proximity to our next standard deviation. We're gonna hide all drawings for now. Just so, oh, look at that, so clean, so clean, and we can clip that. Hold on, hold on. Come on, man, it's already here. You know what? Screw you. I'm gonna do it differently then. I'm gonna copy the image since it doesn't want to do it how I want to do it. What? It's already logged in, bruv. I was already signed in, mate. What is the dealio? Yep, that's me, that's me, that's me, yep, that's me. It's all right, it's all legal, it's me, it's me. I only want for me. I don't like watching all, oh no, yeah, the following, the people I'm following, that's all I want to see. Yo, it's a tax record from which we didn't see from brokers. Now you get the back better. Anyway. I can never spell Twitch, you know. How you spell this app thing here? Twitch. We established yesterday that I'm not a speller, you know what I'm saying? Put me in a Put me in a spelling bee and I'm losing. How do I paste it here? That's it. That's all I wanted to do. That's all I wanted to do. Come back, drawings. Come back to me. Oh, how come it also removed the time indicator, the indicators? I said hi drawings, not indicators. So where's my 9:30? Oh. Whatever, major. -2 getting smashed there. Let's see what else this trade will offer us today on this Not For Professional Friday. Not For Professional Friday. All right, so the risk, right? The three top risk, we had black swan events. Then we have gap risk. These are the three uncertainties in trading. Gap risk in terms of Friday close to Monday to Sunday's open. These are the uncontrollables. We do not control these things here. We can't control these things. All we can do is try to minimize it as much as we can. And that's where day trading comes into play. But we'll get into that in a bit. Friday close to Sunday open. And we have day close to overnight. Fucking when we close on at 6 p.m. to when we open, oh no, when we close at 5 to when we open at 6 p.m. Okay, bloody hell. Is it record as a day close? Would it be a day close? Where do I have that? Where is it? Me not have that open right now. Me not have that. Me not have that open. Okay, whatever. So yeah, daily close. I'll just put that one down. Daily close to overnight open. And thirdly, we can also have technical, right? Technical difficulties that happen in trading, like, not being filled where you're supposed to fill. All right, broker issues, due to a black swan event, or like market just running, right? Your stop is not guaranteed, right? Your entry is not guaranteed. Your exits are not guaranteed. Those are all technical difficulties that you can have in trading. Those are risks that we sometimes cannot control, right? It's out of our control. So technical. When you're dealing with technology, right, you're going to have technical difficulties. I'll just put technical issues. We will refine this later on. All right, we're just trying to get the ideas down right now. So, risk control return, right? For risk, I'll stop now, right? At -2 would be at 0.5 of the range here. Yeah, so we got our 3 risk in trading. Ba-da-ba-ba-ba. We're loving it on this NFP Friday. We having fun here today. We having fun here. We building behind the scenes of I'm the Trader Capital. And we're just doing it. We're just doing it all on non for professionals. Not for professionals. Good thing I'm not a professional. Just kidding. Anyway, let's get into the three risks, right? Black swan events. Hold on. I'm going to need this thing open here. I'm going to need to pop it up. Because where is it? I don't need any of these right now. Why are they open? Wow. What I need. I think is this one. I think this is the one I need. I think this is the one we need. Now let's see if it's the one. Don't slow me down, please. Don't slow me down. I already got too much going on here. Yeah, that's the one I need. Let's close this bad boy. We don't need you here right now. We don't need you here right now, right now. I also don't think this is the one. Yeah, this is not the one either. It must be the clean one. It must be the clean one. It must be the clean one. Straight up, why now? Why now? Why now? Yeah, this is the one. This is the one. Okay. All right, so black swan events, all right, or black swan event is something rare, unexpected, and massively disruptive. All right, it's something you don't see coming, but when it hits, it changes everything. These events expose the fragile nature of traditional portfolios and long term investment strategies. So, most people lose during black swan events. Only a small handful thrive and survive, and the top 1%, well, you know them, they thrive in black swan events. Black swan event can be something like 9/11. 9/11 is a black swan event. COVID, COVID-19 or COVID-20, whatever the hell it was called, was a black swan event, right? Was a black swan event. Um, Also, hold on. Give me a minute. Barely even see this thing. The 2008 financial crisis was a black swan event. The dot-com bubble. We have Black Monday in the 1980s. Well, those are lists of, oh, the Great Depression, right? That was a black swan event. In the 1929. So those are a list of black swan events, right? They're unplanned events that when they happen, they cause a massive disruption that we don't know they're coming until they're here, right? So that's a risk in the market, right? During um I believe it was Black Monday, like the market tanked. Or was it Black Friday? Black Monday is Monday, Black Monday, Black Friday. Black Monday, the market tanked, right? But that was something nobody could have known that was coming. You can't avoid those, right? It's a risk. It's an uncontrollable risk. And we'll get into how uh style of trading, right, and our investment strategy tries to minimize these top three risks that are uncontrollable, right? -3 getting smashed, -3.5. I probably would have been taken out of that because I would be getting out at 33, 33 was the high of this. Oh, 33. I'm not sure if it would have taken us out yet, actually. We not sure. Oh, we got open range. Open range. Open range has been complete. Opening range. We got opening range. That's not the high. This is the high right now. I want to change this, rename it to opening range. So let's get examples of black swan events in here. Let me tell you, the people that lose during a black swan event are those who have no control of their money, right? If you relinquish control of your finances, let's say to a 401k or to, money managers, or you just don't have control of your money, right? You're at risk when black swan events happen, right? Yeah. Well, specifically, if you're, I let's talk in terms of the financial markets. In terms of the financial markets, if you're like in a 401k or one of them big things that the people do, well, you're subject. They invest into the market long term, right? So you're subject to black swan events where the market just tanks, right? And there's nothing that you can do about it. While as for us here at I'm the Trader Capital, we're actively trading the market, right? So we're in and out, in and out. Yes, we obviously are subject to black swan events because we can be in a, like this trade that we were in, right? We could have been in this trade right here, and let's say a bomb is let off somewhere in the US, right? That will cause the market to do whatever it wants to do, probably tank, in my opinion, right? We could have been in this buy here, and then a bomb goes off somewhere that we don't bloody know, right? And all you know is the market's just going down, going down, going down, and our stop will not even be respected. So yes, we are at risk of black swan events as well, but for us, okay, it's not as prominent or imminent, if that makes sense. It's not certain. Not that it's not certain, because it is a certain risk. But for those that are like in long term investing in the market, they're like just stuck. For us, it will just be like that one trade, right? It will be that one trade that, we'll probably take a loss on, or more than the loss that we wanted to take. We won't be risking more than 30% of our equity anyway, right? So if we lose that 30%, we still have 70% of the account left, right? That's not our risk. That's where risk management comes into play. Like I said, it's the holy grail of trading. Anyway, enough on black swan events. I think we go enough there. We can refine that later. Then gap risk. Not much to say on gap risk, really. I have this somewhere. Where is it? la la, dee dee da dee da, dee dee da dee da. These things are mad small. How was I expecting people to see this thing? I can't even see this thing. That is crazy. That is crazy. Oh, okay, that was what I meant. New week opening gap risk and new day opening gap risk. Oh, come on, man. I knew I had this somewhere. Because what I mean by gap risk in terms of new week opening and new day opening is that when we close, let's go back here. Right here. When we close at 5, right, and we open back up at 6, as you can see, we closed here at 5, all right, and then we opened all the way down here at 6. That gap risk is something that we cannot control, all right. We don't know, the market could have gapped all the way down and it could have stopped, closed here and then open all the way down here. If you're in positions, right, if you're in positions, you're at risk, right, overnight. If you're in position overnight, you're at risk for gap risk, right, for when the market closes and you have no idea, nobody knows where it's going to open. This is the new day opening gap risk right here. We also have when the market closed on Friday. Let's go to our higher time frame. Let's go to our higher time frame. This is a new day gap risk here. Okay. Sunday. Not much of a gap there. Trying to find one. Yeah, there we go. This is where we closed on Friday. All right, this is where we opened on Sunday. As you can see, it was a gap down, but this gap here can either be a gap all the way up here or a gap down here. Nobody knows where the gap opening will be. If there's going to be a gap opening, nobody knows where the gap is be. So if you're trading, if you're holding overnight, okay, like some of these long-term portfolios do, right? If you're holding overnight, you're at risk for the gap risk. Or even if you're trading like a short-term trading that holds overnight, if you're holding overnight, you're at risk for gap risk. But for us here at day traders, FMC, day traders for life. All right, I'm the Trader Capital. We're actively trading. We're day trading. Okay, so we're done right before the market even closes. Right. We don't hold overnight. Okay, so we're not subject to gap risk. Okay, so that is how we minimize gap risk in terms of our trading. Black swan events, there's nothing we can do personally about it. If we're in the market on the day where a black swan event happened, we are going to be at risk, and that's just something we cannot control. But gap risk, we do control that in terms of being done before the day is over, right? All our positions are closed before the next day, and all our positions are closed before even the week finishes. All right, so Friday will be done before the market closes, so we're not subject to gap risk there. Okay, that's how we control that. And then the technical issues that we talked about, right? Technical issues like, broker issues not getting filled, right? Spread issues, stop loss not getting filled, exits not getting filled, just technical difficulties, Wi-Fi going out, so we don't even know what's happening in the trade. Yeah, it can happen. It can happen. All right, all the technical things that comes with using technology, right? All those issues, right? That's a risk that we take as well. Technical issues, we haven't discussed how we mitigate those. We need to talk about how we can mitigate those. And that would just be having procedures in place, like having layers of protection in place in terms of, hey, if this happens and we have no control of what's going on, all right, we'll have a layout that will just close all trades, close all position, right? Close all position, and if that fails, just just exit, bro. Exit. That obviously I need to get into that more, right? That's a new risk that I introduced because I thought about it. I'm like, it's not just that. There's also technical issues that can happen while trading, right? While using technology. So I have to dig more, do more research on technical issues, that potential technical issues that we can have, and how we can minimize or actually have procedures and protocols in place to minimize those technical issues. So yeah, that's something that we'll need to obviously do more research on as we continue, right? Oh, we have stuff here. If you can't embrace these three uncertainties, you will always be at the mercy of the market. But if you build your system with them in mind, you create the kind of resilience that lets you trade like a professional, not a gambler. Who was I? Who was I when I wrote that? Oh, mate. So we do have something. You can't predict when they'll happen, but you can build a strategy that won't break if they happen. So cool, 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 cool. Risk control return. Now we're waiting for first hour of trading. Now we got risk. Let's go to control. No, I believe we can use this one here. Control. We control the risk here with our style of trading. Which is also part of the deal and strategy, right? Style of trading with asset class. Futures is more of a professional market, right? The price that every price is delivered the same on across all platforms, right? Everybody gets the same price, right? The same highs, the same lows, unlike other asset classes. Okay, so that kind of eliminates some technical issues. It could potentially eliminate some technical issues. No. Why did I put asset class? Why is my asset class? It's an edge, yes, but is it to control the risk? No. That will go into the edge part, right? Let's see what I had here though. This is where it flips for people, right? For investors, we'll get into like fund structure and stuff. For traders, we'll get into the three pillars. But the beginning will always be the same. Negative 3.5, getting smashed there. Taking open range buy side. Session bias is confirmed. In line with daily bias, in line with weekly bias. Okay, we're buys all around. Buys all around. Got a first presented fair value gap on a 15-minute time frame there. This is what I've been noticing all week. All right, it clicked, finally clicked yesterday that that's what's been happening in price, and we came in today understanding that, hey, it's a potential for a continuation setup here. We saw it and we were in there. Minimal drawdown when we go into that. Minimal. This is how I want to see all my trades behave, right? Don't diddy-daddy, just go straight to my targets. That's it, and that's all. Give it to me. Give it to me. I'm surprised that this small range only allowed a small 2 contracts. It's probably because of risk right now, volume right now is high. Cannot believe it only gave us 2 contracts. I could have made it 3 technically. Could have somewhat made it 3, but not part of the job. We're going to be watching this. I'm trying to see if there's a gap in there somewhere. Yeah, there is a gap. It's a suspension. It's a suspension block. And it does come in, and we do have a market structure shift here. This could be a potential continuation, another continuation setup. Let's do it. It's an entry. Oh, we don't have time. Hold up. I'm not entering because I don't have time. Without time, we have nothing. Yo, where's, oh, right here. We'll watch it though. We'll watch it. As you can see, we'll go an entry here on supporting time frame. I want to see you respect this and respect that. For me, it's not for me, right? It's not a trade for me because we don't have time. And if we don't have time, we got fuck all. Excuse my French. Excuse the French. Let's go ahead and see what this one would give us. Let's watch it on the supporting time frame. It's a small one, don't want to see. Bread and butter. It would have given you bread and butter. Entry here. Bread and butter, putting food on the table. Always putting food on the table. -1, getting smashed. Stop would be at 0.75 right now. Continuation setup. -4, getting smashed on our initial trade there. So now, with what I've seen this week alone and from past price action and what we just witnessed right now live in the price action, I'm thinking I need to take off, because right now for my continuation setup, I have first criteria as seeing a retracement setup first and then being able to catch the continuation. But from what I'm getting from price action, the data that we're collecting right now and we're seeing back from price action, is suggesting that we don't need to have that extra step there in terms of anticipating a continuation setup. So I'm depending on how my back testing session goes this weekend, I'm leaning towards taking that part of out as a criteria required for continuation setup. So like I said, I'm letting the data dictate when I adjust, refine, and change things around. Anyway, let's focus on the risk for today and not move on to the next part. I'm just gonna focus on risk today and see what it's saying, because I need to work on the technical issues regardless. Technical issues in terms of risk. The three uncertainties in trading in the financial markets, not just trading in the financial markets. It's not just trading, it's when you're investing in the financial markets, you're also subject to these three uncertainties. So I should say the three uncertainties in the financial markets. But you know what this means? So now with this, right, would the stop would be here right now as we know it, right? But I'm thinking maybe below that fair value gap or the liquidity that it takes here would make more sense. But anyway, let's collect the data though. That's something that I'll need to pay attention to when I'm back testing. It would have come and taken you out here, would have just given you -1. Hey, nothing wrong with -1, right? It let you partial. It gave you bread and butter. It let you partial, let you reduce risk, and then it comes and smashes you out. Nothing wrong with that. We're watching this as a reversal trade, but obviously we don't have time. We don't have time. That's probably why this trade didn't do more than it could have. Who knows? We don't have the time, but we got price. But we trade time and price theory, time and price. When time, horizontal line, aligns with price. Oh, vertical line. This is vertical, right? Yeah, vertical line. Time and price. It's like an X and Y axis. X and Y axis. Who knew math? That would come into play here. Crazy. Anyway, you would have been tagged in this for the retracement setup. Bread and butter. Entry here, exit here. Bread and butter. Putting food on the table. Putting food on the table. Alright? Food on the table. You're fed tonight. Right? You and your family. You're getting fed today. Yeah, feels nice. Yeah, feels nice. We just don't have time though in that setup there, so it wouldn't have been a setup for me particularly. If we do take this one though, I'll be interested. Hold on. What just happened here? Did I click the right thing or what? What just happened? Trading view? Why didn't you enter my share? Oh, because I have a long position too. Silly Billy. Silly Billy, I meant to be short in the bitch. Not long in it. maybe it was a sign that it wasn't even for me. Anyway, -1 getting smashed there. Let's unsync this. We do have first hour of trading is high. The low is the same. So let's do this for it. Cause I don't want to draw a whole new range. I'm still watching this sell here, okay? Even though I'm not in it, because I put a long two instead of I put a short two instead of I put a long two instead of a short two. Buy side. Me not home right now. Me can't pick up the call. Oh shit. Supposed to do something. Oh, sugar, sugar, sugar. Let's sync that all. Let's sync this again and watch this setup here though. He wasn't able to be in. Let's do this. It will be this low here. Still would be in this, by the way. Would be a break even by now, just letting it ride, letting it rock. This would have, oh. This would have given us -1 already here. Want to see price stay below this inefficiency here. Came back and respected this one. Stayed in the lower portion. Alright, giving me signs that potentially right now I'm on side. Now I want to see it stay below this inefficiency here. Oh, we've come into first presented fair value gap on the 15-minute time frame. Could be a continuation forming here. Now I need to start involving it into my setup here. Come into it, so maybe potentially a market structure shift here. The warrant a continuation, which we'll watch if that happens. We've got a closure above this inefficiency already here. So closure above this OB here. And a market structure shift here would reduce probability of this sell here. Which is also, it does complete inside of the 930 candle, so it's valid, but whether I'll be confident in entering this, that's a different story. Anyway, let's ask chat some technical issues that can come up and how we can eliminate those. pressed something. I don't know what the hell I pressed. Say technical risk in the financial markets and how we can reduce them as a hedge fund. Okay, refers to operational execution, system and market structure risk that can negatively impact trading performance outside of the trade idea itself. For a hedge fund like the trader capital, managing technical risk is just as important as having a profitable strategy. Okay, so for technical risk, we have execution risk. The risk is in slippage, delayed fills, partial fills, or poor entries and exits during volatile conditions. How to reduce it? Trade highly liquid markets like NQ futures. Okay, so I guess this is where our asset class comes into play in the technical issue. So I was right. I was right. You was wrong. I should have just wrong. I'm right. You're wrong. I'm big. You're small. I'm smart. You're dumb. Who can guess where that's from? Guess the movie that's from for $100. Guess that movie for $100 right now. Guess it. If I guess it, I'm keeping my $100. If I guess it, I'm keeping my $100. I'm watching a buy here using first percent of fair value gap on the 15-minute time frame here. Paying attention. Let's delete this. Don't want to have too much on the charts right now. Use limit orders when appropriate, which we do. Avoid trading during low liquidity periods. Use professional grade brokers and low latency execution platforms. Develop strict execution protocols. Platform and technology risk. Platform crashes, internet out. See, I was right. Internet outages, software bugs, or data feed failures. How to reduce it? Maintain backup internet and hardwire systems. Use reliable trading infrastructure. Have secondary broker platform access. Monitor data feed stability. Create emergency trade management procedures. Risk management failure. Whew. That will hurt my heart. Risk. Over leveraging, which we don't do. Inconsistent position sizes, which we don't do. Or uncontrolled drawdowns, which won't be us. How to reduce it? Strict daily and weekly drawdown limits. We'll have that in place already. Fixed risk per trade. We have that. Automated stop loss protocols. All right, that will be something that we can create. Real-time risk monitoring dashboard. We'll have that. Right now, it would just be, humans behind the scenes doing it. Kill switch rule after consecutive losses. Yes, I like that kill switch ideas. Not just for the consecutive losses, but for like when we're during a black swan events, we can have a kill switch, or when we do have the first risk that we talked about, execution risk, right? In terms of slippage, delayed fills, entries, volatile. Oh no, actually no, not that one. The second risk, platform and technology risk. Platform crashes, internet outages, software bugs, and data feed failures. I would love to have a kill switch in place that would just close every trade. Volatility and liquidity risk. Risk: extreme volatility causing abnormal spreads and unpredictable price action. This will come with a black swan event. Okay, extreme volatility, and then your risk is not guaranteed, your stop loss is not guaranteed, your entries aren't guaranteed, and nothing is guaranteed during that time. How to reduce it: reduce position sizes during high impact news. Yeah, we won't know it when the black swan event hits. Avoid trading during illiquid sessions. Trade instruments with strong liquidity, which NQ futures does have. Use volatility based risk adjustment. And then number 5, we have human error risk. That's always a risk. That's why we're going to take that part of, in terms of our trade management and risk management. That part would be AI controlled, and then the human aspect would just be executing on the trade, and the risk part will be AI controlled. That's an idea. That's something that obviously we will work towards. How to reduce it: standard operating procedures, SOPs, which are what we already have in place right now. It's what we're walking through right now. Pre-trade and post-trade checklist, we have that. Trade journal and performance review, structured trader training programs, which we're building right now. Automated risk controls. Me and chat. That means my brain is smarter than chat. I'm just saying. Smarter than chat. I'm smarter than chat. GPT. Okay. 6, model risk. Risk: a strategy stops performing due to changing market conditions. Not for us. We're not even gonna go over this because this doesn't even apply to us. All right. That's how confident I am in my strategy, in my model, okay, and how it performs in different market conditions, because I'm walking it through different market conditions, and I've seen it through different market conditions. So we'll skip this altogether. But anyway, how to reduce it: it says continuous back testing and forward testing, which we've done. We've got over 4 years of back testing and forward testing data. Adaptive market analysis, diversification of setups and timeframes, ongoing quantitative research and optimization. Yeah, that last one we can skip that. It doesn't apply to us here at the Trader Capital. Scale only on. Ooh, I like how it just ended that. I like how it ended that. Ooh, that was nice. All right, chat. I'll give you that one. I'm the Trader Capital. Risk management is not just protection. It is the foundation of survival, consistency, and long-term capital growth. Our objective is to protect capital first, generate asymmetric returns, maintain controlled exposure, and scale only when performance is proven. All right, the goal is not to avoid risk entirely, which we cannot do, right? It is to manage risk intelligently while maximizing opportunity. Whew. I'll give you my money. Take it. We having fun today. We trading, we building a hedge fund behind the scenes, and we are having fun doing it. 1050 macro. We got time here. But do we have price? All right, but do we have price? We ain't got price yet. We're watching this as a buy using first presenter fair value gap on the 15-minute time frame here. Ooh, okay, so we've taken buy side, we've come into inefficiency. Market structure shift here would give that a 15-minute continuation setup, so I'll pay attention there. Okay, so we've taken that high here. First hour range high. On the 15 minutes, we've confirmed the continuation setup. Okay. Come into here. Market structure shift here. Give us a continuation setup. Hold on. Let's do two. Give me 1 175, sell 2. A lot going on this time frame right here. Oh yeah, we got to delete that. um, 2 3. Let's take the rest of out, -2 there. Just because we're, already high, and we'll just take it to the next standard deviation there and be okay with that. Feel no type of weight about that. We've also got a continuation setup confirmed on the supporting time frame. So until this low goes, this low going will be a warning sign for me here. And obviously this one would be confirming a reversal, which is a retracement setup for me. Bread and butter entry here, exit there. Bread and butter, putting food on the table. You're fed like 4 times already today. You're fed like 4 times already today. Bread and butter, putting food on the table. Even on the comes into this higher market structure shift here. Time and price, baby. Time and price, baby. Time and price. This is the time. This is price. Comes into here. Behind below the high. Market structure shift back above it. This is a continuation setup on a supporting time frame. Actually over here too, because this is an inefficiency. Comes back into it. Market structure shift here. TradingView knew what it was doing when it didn't let me get into this one here. It just knew. He's like, yeah, don't do it, my girl. Don't, not today. Not today. So Yeshua made me hit that long instead of short, you know? He's like, my girl, that's not what we want to do right now. Take time, relax, breathe. Breathe! So what I did here, just because of this small range, I put the stop below this candle's low. But really my stop can be right here. -1, it's giving it to me. I'm going to reduce risk in this trade. He hasn't taken me out, but it's giving it to me. So I'm doing what I need to do regardless of what TradingView does or doesn't do. Boom, boom, boom. Stop has been reduced to 0.75 because we've got -1. It's traded to and through it. You know, it just didn't register it to take us out of the trade, which is one of the technical difficulties, technical risk that you can have in trading, right? Price can do this and still not take you out of your exit. It can literally go over the exit. As you can see, 2 candles. What's my exit? 18175. The high of this is 182. The high of this is 18350. Definitely should have took me out on both of these candles, right? But it didn't. That's a technical issue that you can have in trading. We talk about it and we're experiencing it right and live in the flesh, right? In the charts. So something that we need to have in place, what I have in place right now, is whether it takes me out or not takes me out, as soon as price trades to and through -1, I'm going to adjust my stop, right? I'm going to do what I need to do. I might not take something off, but my stop loss gets adjusted as it should be. And that will be one of the procedures that we'll have in place. You know what I mean? Because technical difficulties, technical risk is a real thing, you know. It's a real thing out here in these streets. Look at that. It's just doing it too fast for TradingView to even register it. Like, this is the 3rd time now. You should have registered it the 3rd time. Hey, TradingView, get it together. I know it's demo, but get that shit together, bro. Get it together. You are messing with me right here. This, what is it? 18950. What's the high of this? 190. 190. So -1.5 has been smashed as well. Okay, don't let TradingView fool you. Okay, we've got -1.5 out here in these streets. The market is just going too fast for it right now. She's doing too much fast things for TradingView to register what's going on in their platform. But that's a real shame. That's a real shame. That's a real shame, man. Let's see if it takes us out this time. This time around, let's see if it does it. So we've got -1.5. Okay, now it's giving us 1 after how many, like, come on now. Come on now. TradingView, that's ridiculous, man. Get it together, man. Let's do 1-1 actually here. Let's do 1-1 so I can reduce the risk and show you how to reduce the risk at -2. 2.5, 104.75. Let's sell back 1. TradingView, man. Look at that. Went way above that. Way above it. 2 ticks. above it. 2 ticks above it. And it still ain't give it to me. Ain't that wild? Anyway, we got bread and butter. We got -1. We got -1.5. We just haven't been taken out. Because according to TradingView, it didn't register. Technical risk that comes with trading, right? That we have to be prepared for. We have to have procedures and protocols in place for these technical risks, all right? Whether it takes me out or not, I'm still reducing my risk, right? I'm still here. So that's something I need to put in place. Once price trades to and through this, right, it needs to stop. Risk management needs to do its thing. Well, trade management needs to do its thing in terms of managing our stop loss. Still, regardless of whether we've profited or haven't profited. All-time highs, baby. All-time highs. All-time highs. 29,190. Maybe by next week we're gonna get into the 30s. Oh, that's a long way. That's a long way. That's a long way. That is a long way to go. It's got a long way to go. Good to get up there. Watch it register the stop loss though. Watch it do it. Watch it do it. I'm watching this in here. Oh yeah. That one was quick for you to do though, isn't it? Oh mate. Anywho, I'm watching this. Let's see if it gives it to me though. I'll be interested here. Still drawing macro. Last trade of the morning session for me. If it gives it to me. If not, it's fine. I have no qualms, no issues if it doesn't give it to me. Way. I adjusted my stop in it. If I didn't adjust the stop, a -1. That's something I've been thinking about too. But majority of the time, it doesn't really come back anyway to do anything. So I have no problem with that. 11. I have no qualms with that. I'm not gonna lie. Yeah, that's fine. That's fair. 63. Whoa. That -1 gave us $60, and he came to take us out at 63. So we lost what? We lost a limb there. A finger, like a tip of the finger. Too busy yapping. Do a sell limit or buying because we're selling. Buy limit 1, buy it back. We're looking at 31 or 30. No, yeah, 33. want to see a closure below this and then price use that as an inversion. Got a re-entry in the supporting time frame, took buy side here, drop market structure shift down here. Okay, so re-entry on the supporting time frame. Have we got bread and butter yet? No, we ain't got bread and butter yet. If a trade can't give you bread and butter, you know you're definitely offside, you know what I mean? Have you got the bread and the butter? Do we have the bread and the butter? Ring ding 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 ring ding 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 da. So we just experienced a technical risk in trading, right? We still did our part. The part that we could do. There was not much we could do about that. We talked about it today and we experienced it today. That's sick, you know. I still adjusted my stop, right? Even though it didn't give me the profit, I still adjusted my stop. I still did my part. Oh, bread and butter? Putting food on the table. I think we've had like 5 bread and butter setups today. Well, setups that gives you bread and butter, like 5 of them. All I remember myself saying today is bread and butter, bread and butter. Bread and butter, putting food on the table. Maybe 4, but definitely 4. I think I've said it 4 times. Maybe that's all he wants to give us today, bread and butter. But entry here, exit right here, putting food on the table. I cannot wait to have an account that just does that. Just that alone. Just do that. That's it. That's all I want from you. That's all I require for you to do. That's it, and that's so. Trying to see what fibs aligns with any key levels that we have. Going down, going down, going down. It's Friday. We'll stay till 11:30. We'll see how this trade plays out, and then we'll wrap it up here. We'll wrap it up with this trade, this retracement setup that we got going on here. We thought we had a continuation setup, okay? But obviously we're deep in the premium. We're high, high, high. High, high, high in there, all right, in all-time highs. Okay, gave us a retracement setup here to retrace back inside of the range here. So we're watching this retracement setup right now. This was it taking us out, okay, and then confirming that retracement setup. So once we were taken out, once we were taken out of our continuation setup, right? It confirmed a retracement setup, and that's what we're in right now. I was interested in that. Let's adjust the stop here. We're going to 0.75, which is 182.75. 182.75 right there. We closed below it, all right? We stayed in the lower portion, which is what I wanted to see. Now, I want to see price close below this inefficiency and do the same thing it did here, all right? Use it as an inversion. We could also possibly be coming into here. If we get a market structure shift, which will be this high here, will confirm a continuation setup, which will also take us out really of where we're at right now. I want to see stay in the lower portion of this inefficiency. We already made back the L that we took already here. We're back at break even on the day here. Well, we're up really and truly on the day. We're back at break even on the losing trade. I meant to say, right? Woo! Not for professionals, Fri. Yay! We're killing it here. We're killing it. We're murdering these price action here. We're murdering this entry drill that we got going on. It just turned into an entry drill. Said market structure shift here will confirm a continuation. Not the one that we'll be interested in due to time. Due to the time. This will confirm a continuation. All right, continuation setup confirmed. We just don't have time, all right? We just have price by itself. So nothing for us to do. It's about to smash us out at reduced risk at -1. Let's put it here so we can see it smash us out. And then we'll do a trade performance review and get out of here for today. Today we got our three risk in the financial markets that, you know, we have our risk control return. We went over our risk. It hasn't taken us out. Really, this is a loss in my eyes. Nothing for me to do here. I'm going to do a trade performance review. Solid morning for us here. I'm the Trader Capital. All right, solid morning. What I did well today is that I showed up. All right, I got 1% better. Gained experience, learned lessons that I'll take into my next trading day, next trading session. I definitely got 1% better in this chart today. Build a more confidence, right, behind my continuation setup, and understanding that I don't require a retracement, a criteria of a retracement setup to then catch the continuation. Okay, so that's what this week has really been pounding into me and just teaching me that I don't require that retracement setup to then catch the continuation. Okay, this right here did just confirm a continuation setup. All right, but we don't have time, so it's not something that I would be really engaging in. But I'll be watching it regardless going into lunch session, okay? I'm watching this buy here going into lunch session. That is what we're doing. But other than that, solid morning for us here, all right? We still would be in our first initial trade, if we had more contracts, right, to spare and to give away. It's giving us -4.5 right now. Okay, -5 is in line with standard deviation here. So I'm seeing how with the willingness of price to get to -5 right now. But yeah, solid setup from the morning. That was the trade of the morning right there, and we caught that bad boy. Woo! you caught that bad boy? And that's just from showing up, right? Showing up and doing what we're supposed to do each and every day, collecting data, noticing certain characteristics in price, all right, that we want to, that, you know, the price has just been consistently doing. It's an ever evolving market, right? So we also have to be ever evolving. We have to be paying attention. We have to be in front of the charts. We have to know, analyze the data that we're collecting, right? We're not just collecting data to collect data. We're collecting data to analyze it, okay? Anyway, why for short today? Woke up at a decent hour, got my morning routine in, all right? Arrived at the desk, did what I'm supposed to do. It's Friday, it's a tape reading day, okay? So, showed up and did my job really and truly, and proud of myself, proud of my performance this week, today. Just growing and just becoming a better analyst, a better trader each and every week, right? Each and every day, each and every month. It's just, I cannot wait to see the kind of analyst or the trader I'm going to be a year from now. It's just going to be insane, man. All in that, just to say, I don't think I fell short anywhere coming into today. How I can improve for next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. We've got a solid foundation here of what we're looking for. Now it's just about walking it forward and being disciplined, exercising that discipline muscle, which we've been doing very well, all right? And haven't really deviated from our procedures and protocols, really and truly. So yeah, very happy and pleased with that. Keep analyzing data, all right? Keep taking small steps in the right direction, and eventually we'll get to our destination. Yeah, use this weekend to back test, all right? I'm gonna go back and back test the continuation setup and refine what I need to refine in terms of requiring a retracement setup to then catch the continuation. Okay. There was something else too. Daily bias is 12 a.m. to current price actions. Open range determines session bias, right? Because sometimes our daily bias, our dealing range doesn't get taken. So we'll take open range session bias to tell us what our session program is. And for the weekly, we use Monday's range. All right. There was something else though, but I believe that's all I have here on this notebook. Yeah. Use the weekend to build the life that you want. All right. The weekends are designed to make you weak. All right. A week is a weekend. All right. Okay. Don't be fooled. All right. Don't get distracted. Eyes on the prize at all times. Okay. Know where you're going. Know where you're going. Know what you want in life, and put God first in everything that you do. Okay. Trust in Him. All right. It's in His time. It's His plan. Okay, He has a plan for you. All right, it might not be what you want, but it's not about what you want, right? It's about what He wants for you, and He wants the best for you. He's the only one that wants the best for you. Okay. But anyway, that will be it for our week here. All right, incredible week. I know I say this all the time, but it's just every week is just incredible because I'm just growing and I'm learning and I'm becoming a better person, a better human, a better individual, a better trader, a better analyst. Or a better friend, a better sister, a better everything in life. You know what I'm saying? Anywho, let's wrap it up. No condoms. Put me on the stand up. Put me on the stand up on this Friday, not for professional Fridays. I had fun today. Today was a fun day. It was a fun Friday. But let's wrap this bitch up in a bow. I'm sorry for my language. I'm so sorry. I'm a sinner. I know I'm a sinner. I sin each and every day. But I try to repent and do better, you know. I have a very forgiving God. So, not that I'm trying to take it for granted. But, you know, as long as I'm in this flesh, I'm going to sin, right? The flesh is weakness. It's weak like the weekend. Anyway, let's wrap up though. But before we wrap up, I want to leave you guys with this, all right, little token. There was a time, right, I would finish a trading session and still feel lost. Even on days I made money, I didn't know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entries. So if you've been watching and thinking this makes sense, but I don't really have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go into the 3 pillars. We go deeper into the 3 pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and also the exact process to follow on a consistent daily basis. The same process that we've been walking forward each and every session, each and every day. Okay, so if you're serious about becoming consistent, that is your next step. I used to think that the goal was to win more trades, but that's not the goal. The goal is to become the type of trader who can perform no matter the outcome, because once you have that, the results will follow. Once again, that's it from us here. I'm the Trader Capital. All right, we're done for the week. All right, gonna take a break from the markets. Not too much of a break, because we're gonna backtest this weekend. All right, we're gonna go over price action this week and kind of go over the data. All right, and see what we saw, what was the prominent setups, what was the high probability setups, what was happening in the days, right? What did we do, and what could we have done better, looking back with hindsight 2020 vision. Okay, so yeah, I just want to leave you guys with this. All right, it's been an incredible week for me here. From last week to this week, it's just been pivotal weeks in my trading career. Last week for sure was a pivotal week in my trading career, and this week on top of last week has just been insane. The growth that I'm seeing in the charts, my precision protocols is becoming clearer and clearer to me as to what I'm looking for in the price action. I'm allowing the data that I'm collecting to adjust my processes, my precision protocols, right? Because it's not set in stone, right? The market is ever evolving, ever changing, so I need to be the same, right? I need to be the same, ever evolving, ever changing. But all right, folks, I'm a rambler, tumbler. You already know this, right? It's like, oh, look at that cut though. Look at that cut though. Looking semi-clean, you know what I mean? You know what I mean? You know what I mean? There's something about a cut, you know? There's something about getting a cut that just makes you feel like I'm on top of the motherfucking world, you know? Like, you know, just, you know what I mean? Anyway. I'll catch you guys next week, Monday. Actually, before we go, let's take a look at our schedule for next week before we say goodbyes. Before we say goodbye, let's look at our schedule for next week. What is the week next week? Today was NFP, yeah, that's this week. So next week is next week. Let's take a look at our schedule for next week. Way, CPI, it's been a while since I've seen CPI. Fed chair nomination vote. Ooh. Hey, we already know who's coming in though, so why are they voting? I don't understand, but let's check out it. 60 votes are needed to bring a nomination debate to a close and hold the vote, which requires a simple majority to pass. We'll vote to pass or reject the nomination of Kevin Walsh. Oh, it's Walsh, not Marsh. Kevin Walsh as Federal Reserve Chairperson for a term team every 4 years. But we already know he's coming in, so why are they voting? But whatever. Anyway, we got action-packed week next week: Monday, Tuesday, Wednesday, Thursday. We'll see what Econoday is saying on Monday for Friday. But this is our tentative schedule for next week. All right, all optimal days to take a trade until we get to Friday. But like I said, we'll see what Econoday has on Friday, because that's our main economic calendar that we follow. But the only downside with Econoday is you only get the current week on the current week. Like, you can't see the week ahead, right? You can't see the week ahead. That's why we have a backup calendar for Risk Factory, which obviously gives us the week ahead, so we can kind of have a tentative schedule of what we're doing for next week. So these are trading days, all right? Like I said, we'll see what this day is saying on next week. But yeah. Anyway, that's all for today, folks, right? I'll catch you guys next week, Monday. All right, Monday, May 11th, 9:15 kickoff. Be on time. To be on time is to be late, actually. So show up early, all right? But we kick off at 9:15. So I'll say be here for 9:10. All right, watch that countdown. Watch the countdown. Get yourself prepared. Get your breakfast. Get everything that you need to do. Get your note. Get your pad. All right, and be ready to take in some lessons and we'll continue building the Trader Capital behind the scenes. All right, we got our intro and about us done. We got our 3 risk. Sorry, I just the finger that came up. Fuck it. We got our 3 risk in the financial markets. All right, and how the risk control return. Next week we'll work on how we control the 3 risks. How our style of trading, our asset class. What else? There was one more thing. I ain't even gonna lie. I know there's one more thing. Oh, and our strategy. Yeah. And our investment strategy. How our style of trading, uh, um, bruv, I just said it and I forgot it. Asset class, and our strategy. I help us control the 3 big risk in the financial markets. Okay, so we'll work on that next week. But anyway, that's it from us today for this week. All right, it's been an incredible week here. I'm the trader here, signing out. Good luck, good trading as always. Happy bloody hunting. Remember, you only fail when you quit. Catch you next week.